Okay, so again, all this is in the service of this salary and wage expense. Okay, as I said, there's a separate uh, employer payroll tax expense. This is in addition to salary and wage expense. So FICA is also the exact same amounts that you as an employee contribute. Your employer is going to match that exact same amount. So you're going to see the same numbers here. Okay, so you can see these numbers, they align exactly with these numbers because you are contributing this amount, your employer is contributing the exact same amount on your behalf. Okay, so the numbers are the same, but it's coming from a different place, right? This is going to be coming from a separate expense that the employer is going to have called payroll tax expense. Okay, so you'll see in the T account for like OASDI payable, you're going to have two entries for you're going to have 1419 from the salary and wage expense, and you're going to have 1419 from the payroll tax expense. Okay, so you're going to have two of these here. This is from the employee, and this is the matching amount from the employer. So it's very easy to get confused because it's going to be the same number, it's going to be the same account, but they're for two different expenses. One is for salary and wage expense that, again, is money going to the employee, but they're kind of contributing back to Social Security. And then the employer is contributing a matching amount separately. Okay? So again, I'm trying to emphasize this. I think I've said this like 3, 4 times, but I'm trying to make sure we're all clear on this. Okay, and then there's two extra things. These are unemployment insurance. Okay, so employers, whenever you collect unemployment benefit, if you get fired or whatever, laid off, uh, it's that money is not just coming from some magical place. Okay, all the employers in the country contribute to a fund that pays unemployment benefit. Okay, there are some extraordinary times, like during COVID, where they're making it rain. Right, everyone is getting unemployment. The insurance fund did not have enough, so the federal government basically printed a bunch of money and distributed that to people. That's why we had inflation for so many years. Okay, but in normal times, it's all funded through employer contribution. Okay, so there's two uh, different components of this: the federal and then the state. And you can see the state is much larger. So the federal kicks in some, but really the state, the EDD, it's actually like a pseudo-federal agency, but each state kind of manages its own EDD. They're the ones that manage unemployment. Okay, and I don't know if you guys read the headline in California, like the EDD just massively screwed up during COVID, and like people in prison were like getting like millions of dollars of unemployment checks, and so it's like, again, and go back to the point of like your tax money is getting collected, but are they doing a good job of managing it? I think the fraud was in the hundreds of millions. Okay, it was a significant amount during COVID that people were just scamming off of this. Okay, they weren't actually ever employed. They were just, scamming the government to get free money. Okay. Um, but yeah, it is, the current system is as it is, managed by the government. Okay. And again, the rates are here. FUTA is 0.6%, SUTA is 5.4%, but they're only levied on the first $7,000. Okay. So every year, every employee on the first $7,000 they earn, they will pay these. And then after that, there's no tax. So you can see here that all these employees have already, actually these three and this one have already contributed. Okay. At the start of the year, they already contributed towards these funds because it's on the first 7,000 every year. Okay. This person must have just started because they have zero beginning balance earnings. So this is a new employee. So on this first 7,000, they're going to pay these insurances. these two. Okay, so that's why only this employee, Lisa, has an amount here. Okay. Next month, if she earns another 4,000, you'll have to do a similar calculation where she's going to be crossing over a border, right? So from 0 to 4,000, this full paycheck is going to be subject to futa and suta. If our limit is 7,000, in the next paycheck, when she goes from 4,000 to 8,000, only from here to the limit is she going to pay. Okay, and then after that, this and then all her subsequent paychecks are not going to have that. Okay, so this concept of a limit on how much up to a certain amount a tax is charged, and then above that, nothing, you'll always have a special calculation to do when the pay crosses that border. And then finally, we'll have this journal entry for the employer. Again, this is a separate payroll tax that they're going to pay. So you have this payroll tax expense in addition to the salary and wage expense. They're contributing to payroll tax here, and then futa and suta. And it's all based on the calculations that we did in this table. Okay, you can see all the amounts are basically at the bottom here. So this table is important because it will help us figure out exactly per employee what the calculations are, and then the totals are what are going to go into the journal entry. Okay, make sense? Yeah? Okay. And then at the end, okay, this is the final journal entry. You're going to pay off all these liabilities. So the FICA and OASDI, remember there's two entries here. There's one from here, and then there's one from the employee's contribution here. Okay, so that's why when we're finally paying off the government, there's 2 times. That's why this amount is here. So basically, what is happening here? There will be one check. These are going to go cash to the Social Security Administration. This is going to the IRS. Employee insurance premium payable. This is going to Kaiser. This charitable giving, I think, is United Way. This is from the employee, United Way. This is going to EDD. Okay, so all this stuff is going to third parties. Okay, and then this cash is all taken out at once, but it's like 5 different checks that are written to different parties that are owed money.